Hey everyone, welcome back to Corporate Decoder. Today, Tevogen Incorporated TVGN just dropped their second quarter report for 2026, and I am seeing a few big red flags that really matter. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is burning through cash, but raising it through stock sales, and their Nasdaq listing is seriously at risk. Alright, let's dive into Tevogen's latest financial report. This is a company trying to make it big in the healthcare space, focusing on T-cell therapies and using artificial intelligence for drug development. They've been around since 2020 and have put most of their energy into getting their technology off the ground, raising money, and navigating this big business combination they had back in early 2024. But here is the catch. They haven't actually made any money from selling products yet. Looking at the numbers for the first 6 months of 2026, they reported a net loss of over $11 million. That is a big number, and it is actually an improvement compared to the same period in 2025 when they lost almost $16 million. So they are losing less money, which is good, but they are still losing a lot. On the balance sheet, their total assets are around $4.7 million as of June 2026. That might sound like a decent amount, but when you look at their liabilities, things get a bit concerning. Their total liabilities are a whopping $13.6 million. This means they owe a lot more than they own, which is a common situation for companies in this stage, but it highlights their need for more funding. Let's talk about their cash situation. As of June 2026, they had about $1.1 million in cash. Now, that sounds okay, but remember they burned through over $5.7 million in operating activities just in the first 6 months of 2026. This cash on hand won't last very long if they don't find new ways to bring money in. Tevogen is actively raising money to keep the lights on. They've got this loan agreement with the Patel family, LOP, and they've drawn down over $6.4 million. They also sold what they call pre-funded warrants, which brought in about $3 million in May 2026. And then there is this sales agreement where they can sell up to $50 million worth of their common stock. They've already sold about $6.4 million worth of stock under this agreement. This is how they're managing to stay afloat, but it is through issuing more stock, which can dilute existing shareholders. Now, a significant part of their expenses, especially in research and development, is non-cash stock-based compensation. For the first 6 months of 2026, this amounted to over $6.1 million. While it doesn't hit their cash balance directly, it is a huge part of their reported expenses and shows how they're using stock to pay and incentivize employees. When you look at the net loss per S-share, it is pretty grim. For the first 6 months of 2026, it was a negative $3.16 per S-share. This means for every share of common stock, the company lost over $3 in the first half of the year. Tevogen has a complex capital structure with different classes of preferred stock. They have Series A and Series C preferred stock. The Series C preferred stock alone has a liquidation value of over $6.8 million as of June 2026. This means if the company were to be liquidated, these preferred stockholders would have a claim on that much money before common stockholders get anything. Now, let's talk about the company's status. Tevogen is listed as a non-accelerated filer and a smaller reporting company. This generally means they have less than $75 million in public float. They are also an emerging growth company, which allows them some flexibility with reporting new accounting standards. This is a really big deal. Tevogen received notices from Nasdaq in April 2026 that they were not meeting the minimum market value requirements for listed securities. They have until October 2026 to get back into compliance. If they don't, their stock could be delisted from Nasdaq. Historically, companies that get delisted often see their stock prices plummet further. It would make it much harder for investors to buy or sell their shares, and it could signal serious financial trouble. This is a situation very similar to what we saw with Bed Bath & Beyond, where ongoing compliance issues and a lack of market value ultimately led to their downfall, for a stock trading at less than $1. As Tevogen's has, maintaining that listing is crucial. Looking at their stock compensation, they've issued a lot of restricted stock, especially to their executive officers, including a large grant to Dr. Saadi. These grants are designed to attract and retain talent, but they also represent a significant future dilution for common shareholders. The fair value of these recent grants alone is over $11 million. From a business strategy perspective, Tevogen is pretty focused. They operate in one main segment, which is developing these precision T-cell therapies and using AI for drug discovery. They don't break down their results by different product lines because, well, they don't have any revenue generating products yet. Their entire focus is on getting TVGN 489. their COVID-19 therapy candidate, and other pipeline projects approved and to market. So what is the story here? Tevogen is in a classic development stage struggle. They have promising technology, but they are burning through cash rapidly and have not yet reached profitability. Their biggest immediate challenges are maintaining their Nasdaq listing and securing enough funding to continue their research and development. The fact that they're relying on stock sales and loans to stay operational is a concern. The upcoming deadlines to regain Nasdaq compliance are critical. If they fail to meet those, it could trigger a much larger downward spiral. What I am actually looking for is evidence of a clear path to revenue and profitability, beyond just more stock sales. Without that, the risk of delisting and further shareholder dilution remains very high. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. Like this video, subscribe for more, and join our Discord community linked in the description below.